What's all the shouting about? They're playing the commodities game, buying and selling cattle futures, which of course begs the next question, what's a cattle future? A question that never would have occurred to us if Hillary Clinton's 100-to-1 profit in cattle futures hadn't become a page one story. So, with $5,000 in hand, last week I became, like Mrs. Clinton, a speculator in the commodities game. By now, everybody knows how she did. How did I do? Stick around and find out whether a novice investor today could do as well as Mrs. Clinton did 15 years ago. We decided to play the commodities game. So I opened an account. The first thing I found out was that today it takes more than $1,000 to get into the game. So I have to write $5,000 just to open an account.
That is correct.
I was able to open my account last Monday with a big Wall Street investment house on the condition that we not identify the broker or the company. If I'm giving you $5,000...
Correct.
How much could I lose?
There is no real limit to how much you can lose. If
I had heard you need a cast-iron stomach for this. I had heard it was a pure crapshoot. Now, I was buying cattle futures myself and hearing I could lose everything, could end up owing my broker 20 times my $5,000 investment. It may look like sheer pandemonium, a color-coded insane asylum. But it's really the Chicago Mercantile Exchange, the largest futures trading market in the world, and the place where Mrs. Clinton put her money 15 years ago. We toured it with the chairman of the exchange, Jack Sandler. If you look at this, that's going on behind us. It's a total zoo. There is no order here. It's a mess. How can anybody know what's going on
But,
here?
you know, the adage that things aren't what they seem is never more true than what's happening right here. This is so organized and so structured, and if it weren't, it would be a disaster.
This is organized and
This is
structured?
organized and structured. Every single trade that is made is confirmed precisely in terms of price, in terms of quantity, and in terms of buying or selling. And approximately $400 to $500 billion of business will be transacted in this pit today.
Billions.
Billions in one day will be transacted for the world institutions that are banked on these phones.
And these people actually know what's going on in here.
Precisely.
Just screaming and yelling.
Precisely.
But what precisely are they doing? Basically, these screamers inside what they call the pit are buying and selling. It's like an auction. They're signaling prices to traders up in the bleachers on the phones. The exchange once tried to computerize this bedlam, but believe it or not, they found that the yelling and the hand signaling were far more efficient. In this pit, they're not betting whether pork bellies will go up or down. They're betting whether interest rates will go up or down. Agriculture used to rule the commodities exchange. Now it's finance. Goldman Sachs,
All the big firms, chemical futures. Okay.
Now, who are they
Sanwa
talking
Bank,
to? Who are they
Citicorp, Fuji, Mitsui. They're talking to their customers around the world.
Let's say Citicorp or Chemical believes interest rates are going to go up in the future. They will buy futures contracts today, which are really agreements ensuring that they will get a lower interest rate 6 months from now. It's like home buyers locking in mortgage rates. Here, they call it hedging. Basically, they're buying insurance. For most of the players, it's the opposite of risk-taking. It's risk managing. What are you doing?
Trying to make a living.
Can I see your card? Now, did you just lose money?
No, I made money.
This area is where cattle futures are traded, where Mrs. Clinton invested her money. I wondered who was making my buy of one contract of cattle. Of course, when you buy futures, nobody delivers cows to your house. You never really own the animals. The traders are putting bets down on what the price of beef will be in June or December.
The meat producers, the food wholesalers, the meat packers, they come here to insure themselves against the unexpected price swings and the beef market, and cattle in particular.
So mainly people in the industry are in this market for the most part.
98% are all steeped in the industry, whether they're in the producer part of the line, the chain, or whether they're in the meat packing part of the line of the chain, or whether they're in the wholesale part or the retail part of the chain, or whether you're McDonald's.
Or whether you're Colorado cattleman Dick Farr. If there's a typical customer buying insurance in the Chicago cattle pit, he's it. And he's been playing futures for 25 years.
Do any people who get into this market ever come out to look at the cattle thinking they own it?
No, not really. Not anymore. They don't do that.
Well, I have.
And you're here to look.
I'm here to look over my boys. Now, why are you in this market as a cattleman?
Well, as a cattleman, I'm trying to protect the value of these animals. So we watch the futures market on a daily basis. We watch the cash markets on a daily basis. And I try to protect the value of what we have.
There are some traders who aren't trying to protect anything. Like Hillary Clinton, they're just trying to make money.
She's a speculator, pure speculator. Pure speculator.
And was that
That's not a dirty word, however. She's a pure speculator, which is what America's all about, trying to improve your life.
This week, I was a pure speculator, too, and in the same cattle futures that Mrs. Clinton traded so long ago. Tuesday, I placed a bet that this coming June, cattle will sell for about 74 3/4 cents a pound. If that price moves up between now and June, I can sell out and make money. If it goes down, I'm stuck with a loss.
So how am I doing?
We're up 5 points.
Up 5 points.
Correct.
Well, but what does that mean in terms of money?
$20.
Just $20.
That is correct.
There's a huge difference between the market I'm in and the one Hillary Clinton was in. Right now, cattle prices are very stable. But talk about great timing. Right after Mrs. Clinton invested that $1,000, cattle prices took off like a rocket.
This is a chart, Leslie, for the last year, basically, in cattle. There's no movement. Now, you go back in the 70s. Here is 78 right here.
Oh, this is when she was trading,
when she was
78.
in. See what happened to the market?
Wow. And she was in it for this.
I think she got, well, I don't have the records
I'll tell
right
you
now,
when
so.
she was in it. She was in it for this spike and got out right as it came down and made money because she bet it was going to go down.
Very good trader.
Is it possible for someone who's a total novice, the way she was, an amateur, to jump in like that and in a few months make 100 times the money they invested?
Well, it's possible. It's highly improbable.
Even in that market?
Even in that market.
How did you do in that market?
Not as well.
Close?
No, we didn't do as well.
There's as much skepticism on Wall Street as there is on the farm about how Mrs. Clinton managed to make such a killing. Maury Markovitz has spent his career trading futures. His clients have given him $40 million to invest for them.
My best year in trading, I multiplied my money by 22 times. That was very unusual. That was very unusual, but I was able to do it.
That was your best, 22.
That was my best year.
And Mrs. Clinton?
She did 5 times better than I did. She multiplied her money by 99 times. She did it in 10 months. It took me a year. I had 16 years experience.
In 1978, Mrs. Clinton was getting trading advice from Arkansas lawyer James Blair, a close friend who was aggressively playing the cattle markets at the time. But the White House says Mrs. Clinton was in control of her own account and made her trades herself.
It's very difficult for me to believe that Mrs. Clinton was trading her own account and managing her own account. It's extremely difficult for me to believe that. Everything, it just doesn't make sense.
Markovitz has examined Mrs. Clinton's records that were released by the White House. In her very first transaction on October 11th, 1978, she deposited $1,000, a small amount to start with even in those days, and made a $5,300 profit the very next day.
To do it with $1,000 is extraordinarily unusual. That's someone who made 500% on their money in one day.
To do that well her first day, Mrs. Clinton had to make multiple trades involving hundreds of cattle. But she was young and a complete novice without much of a nest egg. Markovitz says her broker was allowing her to risk losses she couldn't repay.
If someone told me that a person opened an account with $1,000 and the next day traded 20 contracts of cattle, I would say, well, someone's doing them a favor, someone to allow them to trade that way.
Everyone who trades futures, me, Mrs. Clinton, everyone, operates on what is called margin. That means they only put up a small percentage of the money they're actually risking. If they begin to lose, their broker is required by exchange rules to ask for more money.
Let's say I open an account with you. You're a trader, and I give you a couple of $1,000, but then I'm losing money. And you'll come to me and ask me for more money.
Absolutely.
Immediately?
Immediately.
And that's called margin requirement, right? Would you ever not call in money from someone? A favorite customer?
You're obligated to do that.
You're obligated
To do that, to send out a margin call.
But Mrs. Clinton's monthly statements indicate that even when she was losing, she was never required to come up with more cash. There was a point in July of 1979, actually just before her biggest profit, when some of her trades went sour for a time, and her account was allowed to remain in deficit for several days.
She was in the hole in a minimum of 12 or 13,000. It could have been as much as 40,000.
We have no evidence that she was ever called to put more money in. Is that correct?
No. Well, we can see that no money ever, in fact, was put in the account, and she was allowed to continue trading. So,
again, let me ask that question: was her broker doing her a favor?
oh, definitely not. Definitely, she got extraordinarily preferential treatment in that respect.
There's no question about it.
No question about that.
The White House told us that if Mrs. Clinton got preferential treatment, she was just one of many customers given unusual leeway on margin calls by Revco, the company that handled her account, and by her broker, a man named Red Bone. Both Bone and Revco were punished by the Mercantile Exchange.
The allegations by the exchange were repeated margin violations and order entry irregularities in the office in Springdale, Arkansas. And the case was eventually settled before going to trial by Revco and Red Bone for the biggest fine ever in the history of the industry. Back then, when you rewind the clock 15 years, $250,000, and Red Bone was suspended from the exchange and from trading for 3 years, which was the biggest suspension in the history of the industry, not just this exchange.
Maury Markovitz says that Mrs. Clinton should have known that what Revco and Red Bone were doing was wrong.
Don't forget, she's a lawyer, and she specialized in the financial area. A lot of her legal dealings have been financial. She signed the brokerage statement. She knows what the rules are. She had to know the rules were being bent in her favor.
The White House insists she didn't know. But even playing by the rules, Mrs. Clinton was taking financial risks that some professionals have called extraordinary for someone of such limited means. The Clintons' combined income at the time was $50,000. They did not own a home. As one trader put it, Mrs. Clinton, with no experience, was betting like a riverboat gambler.
Mrs. Clinton's account was carrying positions where the risk was actually equal to or greater than the Clintons' total net worth. Everything they had. The type of risk that she took would probably chill the blood of Evel Knievel.
Mrs. Clinton's office says that she eventually found the risk too nerve-wracking and walked away from the market, even though she had just turned $1,000 into $100,000. My trading style was more Jack Benny than Evel Knievel. I made just one trade, and by the end of the week, I was down $100. On top of that, I owed my broker his commission of $80. Maybe next week.